Welcome to Market Momentum. This week, the markets got absolutely rocked by a single piece of geopolitical news, and it sent shockwaves through pretty much every asset class. So let's dive in and break down what on earth happened. So what was the catalyst? It was a surprise announcement, really, threatening a major escalation in trade tensions with China. Specifically, they were talking about an additional 100% on tariffs. And yeah, that one statement was all it took to unleash a huge wave of uncertainty. So today, here's what we're going to do. We're going to break down exactly how this news slammed different asset classes. We'll look at that initial shock in stocks, the crazy high-stakes reaction in the crypto world, and of course, what it all means for your strategy going forward. All right, let's start with that initial impact. You have to understand, this wasn't just some minor headline you scroll past. This was a genuine geopolitical shockwave, and you could feel the ripples spread across financial markets all over the globe. And the market's reaction? Oh, it was fast. I mean, immediate and decisive. Investors, totally spooked by the idea of a new intense trade war, just rushed for the exits. It was a scramble to price in this massive new risk, and it happened in the blink of an eye. So let's zoom in a bit on the US stock market. How did the big indices handle this initial storm? Was this just a flash of panic, a knee-jerk reaction, or was it the start of something bigger? The sell-off was definitely significant. The S&P 500, you can see, closed down more than 2.7%. But the tech-heavy Nasdaq, it got hit even harder, dropping almost 3.5%. And that kind of makes sense, right? Tech companies are often way more sensitive to all the global supply chain stuff and these kinds of trade tensions. But this right here is the million-dollar question. It's the one every single investor asks themselves in moments just like this one. Does a sharp, sudden drop mean there's a deeper crisis brewing, or does it actually open up a potential buying opportunity? It is so crucial to look at this with a little bit of historical context. We've seen shocks like this before, and more often than not, markets have bounced back to hit new highs. This has led some people to think that maybe, just maybe, some of the big institutional funds that missed the last rally are looking at this dip and thinking, okay, this is the entry point we've been waiting for. Now, from a pure numbers perspective, for all the chart watchers out there, analysts are pretty much zeroing in on one number, the 6,500 level on the S&P 500. That's now seen as the critical line in the sand. It's a key support level that the market really needs to hold on to keep its bullish trend intact. Okay, so if you thought the reaction in the stock market was dramatic, well, buckle up. Let's turn our attention to the crypto space, which gave us an absolute masterclass in pure volatility. And this just says it all, doesn't it? It brilliantly illustrates the difference in the risk you're taking on. The Nasdaq saw a huge intraday swing of about 4.5%. The crypto market? It experienced a staggering, mind-blowing 23% swing. We're talking more than 5 times the volatility. It just shows you how high the stakes are in this game. When you see moves like that, it just hammers home the absolute necessity of a really basic risk management tool, the stop loss. I mean, in a market that can swing 23% in a single day, having a preset exit plan isn't just a good idea, it's essential. It's about survival. This kind of volatility, it really tests an investor's maturity. There's this path people tend to follow. You start by blaming outside forces, the news, the market, for your losses. Then you move on to blaming yourself for making mistakes. But the real goal, the place you want to get to, is where you blame no one. You just focus purely on executing your strategy with discipline, no matter what happens day to day. All right, so amid all that chaos in stocks and crypto, let's shift gears to an asset class that told a totally different story, precious metals. They behaved like a classic safe haven. Gold's performance was, well, a textbook example of resilience. It took a hit for one day, right alongside everything else. But what happened next is the important part. It was immediately followed by a day of recovery. It just erased that loss and reminded everyone why it's considered a store of value. Now, here's something really interesting for the technical traders. They're watching a specific timing pattern in gold's chart. It's known as a 55-bar cycle. And based on how it's played out in the past, this cycle is set to complete right around October 22nd and 23rd. Now, it's not a guarantee of anything, of course, but it's a period that analysts are watching very, very closely for a potential shift in direction. Silver has also been showing some incredible strength, just continuing its strong upward push. For now, the key support level everyone's watching is right around that 48 mark. Its path forward, though, is really tied to gold. If gold can stay stable, silver will likely do well. But if gold sees a bigger sell-off, silver could be in trouble. So let's pull all these different threads together. What are the crucial strategic takeaways here? How do you actually navigate these turbulent market conditions and stay grounded when all the headlines are just screaming chaos? Ultimately, it really all comes down to a disciplined approach. That means not using leverage when markets are already flying high. It means consistently using those stop-loss orders to protect your capital. And it means having the patience to wait for things to settle down before you rush in to buy the dip. In moments like these, emotional decisions are your absolute worst enemy. And this leaves us with one final and, I think, pretty powerful thought. Navigating a volatile market successfully isn't really about being able to predict the future. It's about having a plan. So the question you have to ask yourself is this: is your strategy built on hope, or is it built on discipline? That's our analysis for today. Thanks so much for joining us. We'd really appreciate it if you'd subscribe and like.